VTI performance numbers. In the past year alone, VTI returned 11.27%, including both price gains and dividends. Its 5-year total return sits at 95.86%. Across 10 years, it has grown by 154.73%, more than tripling an investor's money. All this with an ultra-low expense ratio of just 0.03%, essentially free, meaning more returns stay with you. VTI has a current dividend yield of 1.37%, a dividend growth rate of 6.73%, and an average annual share price appreciation of 9.73%. If you invest $9 daily into this ETF, after 1 year, approximately $3,285 invested. After 10 years, grows to approximately $55,000. After 20 years, reaches $240,000. After 30 years, approximately $600,000. By then, your yearly dividend income would hit $3,100. That's why VTI is your foundation. It's broad, it's boring in the best way, and it's always working steadily over the long run. Quadrant 2, Resilience. VOO. Foundations are essential, but you also want something more focused, something that concentrates on the biggest, strongest companies and provides resilience when markets get volatile. That's where the next quadrant piece comes in, resilience. For resilience, I have Vanguard S&P 500 ETF, VOO. VOO tracks the S&P 500, a collection of America's 500 biggest and most profitable companies. These are firms with solid earnings, dominant market positions, and long histories of driving the economy forward. When you invest in VOO, you're not just betting on the market, you're backing its leaders. VOO gives your portfolio a strength layer. These companies aren't just surviving, they're leading. They've been tested through market crashes, recessions, and rallies. When the economy dips, these are the ones still hiring, innovating, and paying dividends. This stability gives your portfolio resilience, the ability to take hits and keep going. You're not gambling on trends, you're backing giants. VOO Top Holdings. VOO's top holdings are a lineup of giants: Apple, 7.03%, Microsoft, 5.58%, NVIDIA, 5.59%, Amazon, 3.78%, Meta, 2.66%, Berkshire Hathaway, 2.06%, Alphabet, 1.9%, Broadcom, 1.65%, and Tesla, 1.53%. Together, these companies comprise over 33% of the ETF, meaning this fund leans heavily into names shaping technology, finance, and the economic future. VOO gives you powerful exposure to technology, healthcare, consumer, and finance sectors without picking individual stocks or timing the market. It's automated, diversified, and ruthlessly efficient. VOO performance numbers. Over the past year, VOO returned 12.19%. Over 5 years, it's up 99.91%. Over 10 years, it is compounded by an impressive 168.52% in price return alone. VOO currently yields 1.36%, distributing about $6.70 per share annually, with a 0.03% expense ratio. It increases dividends by 6.56% annually on average. It has an average annual share price appreciation of 10.32%. If you invest $9 daily into this ETF, after 1 year, $3,285 invested. After 10 years, grows to approximately $56,000. After 20 years, projected to reach $216,000. After 30 years, approximately $659,000. Out of that, more than $530,000 would come from price appreciation, with another $31,000 from reinvested dividends, making $561,000 total value added. By that time, you'd be earning about $2,700 annually purely from owning one ETF. What makes VOO such a powerful complement to VTI is that it sharpens your exposure. Where VTI gives you everything, VOO leans into the winners, and that extra focus can give your portfolio more staying power in tough markets.